What's up, everybody? Gonna go ahead and give everybody a couple minutes to hop on.
At Overlow, we made the management.
Hop on. All right, give about one more minute. All right, guys, cool. What's up, everybody? This is a private webinar just for the Royal Empire family. So, guys, I just want to pretty much get right into it. I know a lot of you guys that were catching a lot of pips with us this week, especially from the beginning of the week up until the FOMC federal funds rate came out, which I kind of want to go into and kind of explain to you guys kind of what happened, what's going on. So the news is a very important aspect as far as fundamentals. You know, I'm a technical trader. I like to go based on technicals. Fundamentals usually play alongside with technicals. And so today, you know, as you can see, we're at the federal funds rate, where it's literally talking about, you know, you can see where it was 50%, 75% for a while now, and then they were predicting it to be 1%, which would mean that it's going to give wiggle room to the dollar, and so the economy can increase and grow. So up until actually the crash of 2008, they had to lower like the funds rate. You could see that it was you know, right up until 2007, you know, it was pretty much like 5.25%, you know, and then the crash happened, and they said they had to lower it, and they had to lower it, and you can see we were starting from 2008. It's been 0.25%, and we've been recovering ever since. You know, it's been 0.25 up until recently in 2015, 2016, became about 0.50%. And then recently in December, 0.75, and now it's at 1%. So what this means, technically meaning that now there's more room. The interest rates have gone higher. I think the dollar can make more money. So when the news got released, it kind of did some, you know, there's some speculation around it because people were expecting a different turnaround and things like that. So normally this would have made the dollar go up, and it crashed. And here's my logic behind why it crashed. One, I think that because there was uncertainty, that they were able to move the market and push the market down, to be able to kind of, you know, one, take out people, and two, usually that's what news move, the long-term plays out. And so I think what end up happening is this long-term move is going to be on the buy side, and I think the dollar is going to appreciate. Trump has done a lot of stuff. The U.S. economy got back jobs, and unemployment has gone down. The economic status of the U.S. is pretty good. So this should be increasing the dollar. The dollar will be increasing. And then now, when I look at the charts, you know, let's go back to technicals, guys. The dollar is sitting on a monthly support right now, monthly trend line. So it is a heavy uptrend, and it is going to, you know, right now it's respecting it. So we could see a possible push up. We could see a possible push up into the markets. All right. So we could pretty much anticipate that the dollar is going to increase based on the fact that the U.S. The federal funds rate increased, and technicals are also. Something is blocking my mic. Hold on one second, guys. Let me grab some headphones. Someone said it's better now. Here, I'm just going to get some headphones. All right. Just want to make sure we're good on sound. All right, cool. Mic's working. All right, guys. So I got my headphones in. Let's continue. Okay, so we pretty much we're looking at a lot of, you know, we're looking at the economical standpoint of the U.S. dollar. It is supposed to be increasing. Inflation is going up, which also means that the economy is strengthening. All right, when the economy is strengthening, you're gonna understand something. You want a little bit of inflation. You know, they say inflation is bad, the dollar doesn't mean anything, but you gotta start making more money. When people start making more money, the economy starts getting better. Inflation is natural, okay, guys? Inflation is a natural occurring thing in any strong economy and any growing economy, right? The point is to always have it at a very steady rate, right? You don't want to have super crazy inflation, but a little inflation is okay because that just shows signs of economic growth. And that's kind of what the federal funds rate was supposed to do today, was to give more wiggle room, to give out more, you know, so the economy can grow, right? So when they keep these percentages, it kind of restricts how much it can grow. And every time, think of it like a bubble. Every time that it increases, the federal funds rate, every time it increases, imagine like the economy has more room to grow. So as you can see, they were very tight on policy for the longest time after the crash. I mean, but look what happened, guys. Look, right before the crash, 4.25%. All right, 4.75%, 5.25%. You see how much percentage is high? I mean, we had super, super bad inflation back in 2007, guys, and everything crashed and everything had to like get rebuilt again. All right, so we're trying to do it better this way. So guys, just know that this is a good sign that the economy will continue to grow, especially on the US dollar. So dollar sitting on some monthly a monthly trend line. Let me fix that a little bit. Okay, the dollar index is sitting on a monthly trend line. UJ came into the play right over here where it crashed. It kind of fell into it. Guys, you never, if you want to see the markets ever to go back up, it's never just going to come down and then just go right back up. What you want to see is what we call a crown, where the market would come up, down, come back up, do a dip, and kind of make like a little W. All right, and usually this is when a play comes out where we start seeing a long-term uptrend. So right now, I'm looking to see the dollar, the UJ, to be on a long-term buy, especially after what I saw with the dollar and everything. So this could be a very possible uptrend that we got going on. So another thing that I wanted to show you guys is the dollar UJ has kind of did its little thing where it did a low, a high, a lower, a higher low, and a higher high. So you guys obviously know how to define an uptrend. Obviously, we would have a low, then we have a high, we have a lower low, and then we have a higher high. So this is an easy step to kind of understand that this is a uptrend, okay? And so technically we have a higher high. Now this did break a lower low than this one over here, but we could still say that this is a higher low than this last low down here. Another thing that I want to show you guys is if we were to mark this up, this was a very, very perfect A to B, C to D retracement, which is a major market pattern, guys, where I want you guys to start using this a lot. This is where I've been kind of finding out these, because once these patterns play out is usually when the market reverses. So if I was to show you guys something real quick, we go over here, and A to B to C to D is where we have from point A to point B, which is a low to a high or high to low, the retracement, and then the extension, okay? And that's why I have my Fibonacci extensions out here, the -27 and the -618. These extensions are where where the markets end up reversing. So you can see UJ did a perfect A to B, C to D, and then downtrend. So imagine catching this up here, just like that. That's 220 pips. So that would have been nice. Okay. So let's talk about Euro USD. What is Euro USD doing right now? I think it's going to continue to do the A to B to C to D retracement. So let me just erase everything. All right. Now, if I want to see a long-term, if I want to see the dollar to increase, Euro USD would have to fall. Okay. So I want to show you guys how these patterns come up in the market a lot. So if I was to show you this, here's A to B. All right. See how the market, the -618 extension, and it fell? This was the A to B, the retracement, the extension, A to B, C to D. The extension point, either the 618 or the -27. All right. And it can continue to do this. All right. There could be more A to B, C to D patterns. Okay. So over here, we have That's where I called a sell on euro this week. This is exactly how I called out this sell. All right. So I drew up my A to B, 0 to 100. This was the retracement. It came and touched the extension, guys. We literally caught this sell right here. All right. And we could have held this position for a total of 109 pips. But I believe my take profit was around 73 pips. So this is exactly how I caught that sell, guys. All right. So you guys can do it too. So another thing that I start now that I'm looking at is we could do the same thing on this end now. So let me draw my fibs. A to B. All right, A to B with a retracement. See how it retraced at the 61.8? D. This is why I called the sell limit for Euro USD, because I believe it's still going to go up. Guys, this is recorded, okay? So this will go up into, right now, guys, I really sometimes like back then when I first started trading, I would have been selling right here, right? I would have been probably looking at the pullback, looking to sell, but I still believe that there's going to be one more move up to finish this pattern. This pattern is almost complete. Why would it not finish it? Okay, so I believe that this is still going to go up and it's going to hit this negative 27 extension. So technically, you guys could buy euro. You guys could buy euro for, some 48 pips right now. All right. So you guys could buy the euro to that sell limit and then ride the sellout. And then what we'll see for a take profit, well, that'll just debate on whether or not, hold on a second, whether or not this trend line gets broken. So as you can see, I have a nice trend line drawn up here, right? I got some nice technicals going on. Okay, let me draw a line through this just so we can kind of visualize it. All right, so if we were to come in on a sell up here, maybe by the time it comes down somewhere in this area, by the time the market, it should probably be, you also want to confluence it with some, some Fibonacci's as well. So probably somewhere around this area, we take profit depending on how far along the market comes down. And, even just from that, that's almost 100 pips right there. So 100 pips up until it tests this trend line again. And then it's either going to break it or continue going up. So we'll see what happens. But I see the dollar rallying for a little bit. That's why I'm in a buy on UJ right now. Okay. I have a buy coming in. It's market is kind of double bottomed over here. And I kind of want to see it to go up. At least, I don't think it's going to come all the way back up. Not right now. I really don't know, but we'll see. But what I do know is I don't know if you guys have seen it, but I have something called the 3-stair method. All right. And I'm going to kind of explain what this 3-stair method is. So pretty much what it means is I'm pretty much finding points in the market where the whole market move is based on Fibonacci's, guys. And if you guys start to understand how Fibonacci levels work, you start to see the market, all it does is just move in levels. That's literally all the market is. And once you can define that, you could predict the move all the way through. So guys, for example, the market moves in levels, all right? Now, obviously, let me erase everything, and I just want to see what your guys' perspective is. This is how I do my 3-stair method. This is A to B, right, guys? This is the 100. If I was to take my Fibonacci's, right, we're going to try to find the retracement. Guys, usually they teach you drop from low to high and then try to find where it retraced. Obviously, it retraced at the 61.8. Cool. That's what they teach you in the textbook. But, I started thinking outside the box. I'm thinking, well, what if we could find the whole move for the retracement, like from the A to B, like from the 100 to the 0, instead of trying to find the retracement? And as I look, guys, you could literally find the market is moving in levels. So you guys need to add the 88.6, the 786, and the 707 to kind of see. But guys, check this out. If I was to watch the market rallying up and bounce, I call it the 3-star method because this is what I need to see in order for me to kind of already draw out my fibs. So, for example, here's 1. Here's 2. And here's 3. Okay, so after seeing these 3 moves, 1, 2, 3, this is where I can start to anticipate my 3-star method. And let me show you what I'm talking about. Where's the charger at? So, guys, this is really cool because this is how I pretty much find out these big moves. So, you guys can see how the market came up at the 0, came up, hit the 786, right? Hit the 886. So you see how the market is already starting to move in levels. That's all the markets is, guys. It's levels. It moves in levels all the time. So now that I've seen that, I could easily just do this. I'd take my fibs, start it from here, and just drag it out. All right. We got to anticipate that we don't know any of this. Oh, shoot, what I just do. All right, we don't know any of this. So all I'm doing is I'm taking my fibs and I'm dragging it out. And I'm going to pull it out up until I see it making sense to where it's my 3-stair method. So as I draw it out right there, somewhere in this area, boom, my levels match up. Just like this. So I would let go. I don't know any of this orange space. I don't know. The market hasn't played out this way. Okay. I don't know any of this has happened yet. But what I do know is the market hit my 3-star method. 1, 2, 3. It bounced up like a little domino, like a little stair effect. And then I could anticipate that it's going to continue to move its way up the levels. And you can see, guys, it's continuing to do that. It went up, came down at the 707, bounced under the 618, hit the 50, hit the 618, bounced up again, hit the 50, bounced up again, hit the 236, hit the 236, hit the 1. Boom. So instead of trying to even find the retracement, I just cut the whole move up. So you guys can see that this is really powerful, guys. This is called my 3-star method. All right. I don't think anybody is doing this. I don't think anybody's teaching this. And I think this is a really cool strategy. I like to add this with other confirmations as well. You know, if it's in a supply and demand zone, if I'm looking at other things, I really think this is a really cool confirmation. So, you know, so if I was to take the buy after my 3-star method, even if I was to take it somewhere around this area right here, 1, 2, 3, somewhere in this area, I could have caught this whole trade up for 161 pips, guys. 161 pips we could have caught just like this. All right. So that's my 3-star method. So you guys can see that Fibonacci's are super, super important. All right. And that's why I'm looking to see Euro USD. So right now I'm actually buying the Euro. All right. So if you guys want to buy Euro USD, take profit is 1.07667. But I'm buying Euro USD right now. Enrique says it makes sense. There you go. So this is how I'm trading, guys. I'm literally just using multiple confirmations for my trade. So now if we put into consideration, we have our A to B set up. All right. Our D point needs to finish out. So I'm buying the Euro right now. And most 95% of people are selling. They got the right idea. Okay. But it's still got about 40 more pips up to go. And then it's going to start trickling down. All right, guys. And I just see this happening all the time. You know, always got to be patient. There's always the bigger picture You know, like I have someone in, you know, someone is selling the euro right now, which is fine, right? It is. I do believe it's going to be a sell, but we want to get that. We want to get that fire entry. All right, we want to make sure that it plays out, because a lot of times, you know, people are looking at the trend line, and it'll easily come up, probably break it, it'll wick, and then come back down. I mean, guys, I've seen the happen time and time again. You know, so right now the market is literally bouncing off the Fibonacci level right here. So you kind of see how the market's bouncing off the Fibonacci levels. Can you just how to add the yeah, guys, so let me show you how to add the fibs in trading. So what you do is you would go to your tools, find the Fibonacci retracement, and then you would click on this, go to settings, and they're right here. So there's a lot of unempty checked boxes. You can literally just, the ones that aren't checked, you can customize them. So I want you to add the 0.707, the 0.786, the 0.886, 1.27, negative 0.27, and negative 0.618. All right, guys, so I'm going to leave this up for just a minute, so you guys can either screenshot it or write it down. And, you know, because these are the levels that I use with my Fibonacci levels, and how I also use my 3-stair method. Okay, cool. All right, so right now we're buying the euro. So we get our entry bar right here. Take profit is 40 pips. All right, stop loss, you know, we can have a really short stop loss, about 20 pips stop loss, because I definitely see during London session there's going to be that fake out, and it's going to go up. So let me see. All right, guys. Sorry, I'm actually on my I'm on my MetaTrader right now. Just give me a second. Yeah, so I'm going to be buying Euro USD up until that D point. Then we're going to have that nice sell entry. Just like how I got you guys this nice sell entry up here, we're going to get that nice sell entry up here. All right, guys? So that's what we're going to do. And, you know, we're going to catch some pips. Now you're saying, like, well, Layth, if you're buying UJ, if you're buying UJ, how is that going to, you know, affect your trade? Well, I mean, the trade is not far off. I mean, I'm buying UJ, but I mean, even if the euro was to go up, then dollar was to weaken, I'm okay with the dollar coming back down. Like I'm cool with it. So now that you guys can see that I'm starting to have some levels going on, I can start to anticipate some Fibonacci sequences. So if I'm to come in, right, eventually there's going to be some move up to where, you know, it's going to be a point A to point B. Where are we going to see that Fibonacci retracement? So instead of trying to find, you know, if it goes up and then try to see where it's going to retrace on the way down, why don't I just find that whole move up and just start drawing out my fibs and just see where it makes sense? So about right here. Let's zoom in real quick. So you can see where this is my zero. Markets came up, respecting the 786, my zero. And it's like almost this is like support. So this could be a full retracement right up here. Like this could be that move. I don't know. You know, there's definitely different scenarios. You know, it could be down here. because the markets are bouncing literally between the 786, the 886, and the 787. So we can see a lot of different scenarios. But even at this scenario right here, I mean, we could just come in and just assume if we were to come in on this buy, that's 103 pips right there. Okay. So you guys see how, like, I don't know any of this. Remember, I showed you the shaded area on Euro USD. I don't know anything that's going to happen right here, right? Or anything that's going to happen down here. But what I am anticipating that I could see the market is starting to move and respect some levels, especially between my Fibonacci levels. So we'll see how this plays out. Since I'm anticipating the dollar to go up, UJ would go up as well. So that's what I'm seeing on that, guys. So I'm buying the euro because it's too good to be true. It's too good to be true. After a huge spike up, people are already looking for that sell. Like, oh my God, now it's the sell. Now it's the sell, right? Then it's going to play out, give it a couple hours, get people confident that it is going to go down. And then most people got their stop losses right here. And then it's going to blow through their stop losses, right? And then they're going to start buying again. And then it's going to hit this and it's going to be a sell. And now they're going to be like, what the heck? What just happened? All right, guys, this is the 95%. We don't want to be the 95%. We want to be the 5% that makes money in Forex. So it's all about a patience game. All Forex is from the impatient pocket into the patience pocket. So that's pretty much it, guys. That's kind of what I wanted to go over. I appreciate everyone that came on this webinar. This is an exclusive webinar just for Royal Empire. So I know you guys are on the winning team. All right, nobody else has got this 3-stair method. So, just keeping, just if you have any questions, just message me in the chat. And we'll just go from there, guys. We'll just keep watching these charts, all right? Okay. Appreciate everybody that was on the call. Everyone have a good night.